The carbon emissions estimated towards Bitcoin mining is a little over 65 megatons per year, which makes it comparable to the carbon emissions of entire countries such as Greece. Today, we're going to be talking about why Bitcoin's carbon footprint is expanding. Advocates of cryptocurrencies rely on the concept of the blockchain. Without it, proof of work is non-existent and therefore makes cryptos depend on it. Proof of work is a form of cryptographic proof in which one party proves to others that a certain amount of a specific computational effort has been expended. Verifiers can subsequently confirm this expenditure with minimal effort on their part. The main issue with proof of work, or POW, is that it is extremely energy intensive, which means that it requires a lot of power to keep the process running. And cryptos have been growing incredibly fast. In 2019, the global cryptocurrency market was approximately $793 million. It's now expected to reach nearly $5.2 billion by 2026, according to a report by the market research organization Facts and Factors. In just 1 year, between July 2020 and June 2021, the global adoption of cryptocurrency surged by more than 880%. But to understand why this rapid growth is an environmental problem, it's important to explain what goes into creating a cryptocurrency like Bitcoin. Unlike fiat currency, which is regulated through central banks, transactions in Bitcoin are tracked through a public ledger consisting of a network of computers around the world, aka the blockchain. Mining, a process in which computational puzzles are solved in order to verify transactions between users, which are then added to the blockchain, allows this validation to take place, which is an energy-intensive process. And it's been a bit of a wild ride for Bitcoin. The market price for a single Bitcoin plunged below $30,000 in June 2021 for the first time since January 2021, falling by more than half from its April peak of around $65,000. Nevertheless, some analysts and billionaire investors are still feeling bullish about the crypto coin, as several leading businesses continue to adopt the currency. Goldman Sachs started trading Bitcoin futures, agreeing to transact the coin at a predetermined future date and price. Tesla invested $1.5 billion in Bitcoin. PayPal announced in March 2021 that it would allow its US customers to use cryptocurrency to pay its millions of online merchants. And in September, El Salvador became the first country to make Bitcoin a legal tender. This, coupled with the fact that big-name brands like AT&T, Home Depot, Microsoft, Starbucks, and Whole Foods now accept Bitcoin payments, could pave the way for mainstream use. But if the bulls are right and the price of a single Bitcoin eventually hits $500,000, it would pump more carbon dioxide into the atmosphere than what is released by countries like Brazil or Mexico. Another sector shaken up by digital assets is the art world, as digital artworks have been making headlines for the huge amounts they've been selling for on the market through the use of non-fungible tokens, more commonly known as NFTs, as a type of guarantee backed by the Ethereum blockchain. In simpler terms, the works are created or minted through a process called proof of work, which establishes its unique identity. This is arguably an improvement over the traditional art market when it comes to storing the value of the original work, but it is terrible for carbon emissions. The carbon footprint of a single Ethereum transaction as of December of last year was 102.38 kilograms of CO2, which is equivalent to the carbon footprint of 226,910 Visa transactions or 17,063 hours of watching YouTube, according to Digiconomist. Meanwhile, the electrical energy footprint of a single Ethereum transaction is about the same amount as the power that an average US household uses in 8.09 days. Only about a fifth of the electricity used in the world's data centers comes from renewable sources. Another crucial aspect of cryptocurrency is that there is only a limited supply available. So, over time, as more Bitcoin is mined, the complex math problems needed for transactions get harder to solve, demanding even more energy in turn. The system is designed this way so that each digital token that gets issued contains its own unique cryptographic reference to the blockchain, which makes sense because it ensures its security. But the issue of energy usage over time is further exacerbated by incentives attached to mining. In terms of Bitcoin, each time a miner solves the complex hashing algorithm required to produce the Bitcoin, or the POW, they receive a small amount of the cryptocurrency itself. The inherent problem with this, as Charles Hoskinson, co-founder of Ethereum, told CNBC, is that, quote, the more successful Bitcoin gets, the higher the price goes. The higher the price goes, the more competition for Bitcoin, and thus the more energy is expended to mine it. As the price continues to rise, so will the incentive to mine the cryptocurrency, creating a feedback loop that spells trouble for the climate. Such numbers should be taken with a good deal of salt. Bitcoin's energy use depends crucially on its price, which swings wildly. The authors of a paper published in April in the journal Nature Communications assume that the long-term trend will be upward, because the rate at which new Bitcoins are created is designed to halve every 4 years. But even another problem besides the gargantuan energy usage is where that energy comes from. There's no definitive statistic related to the proportion of renewable versus fossil fuel-powered electricity used for Bitcoin mining. Earth.org cites two conflicting measures of Bitcoin's energy usage. CoinShares, a cryptocurrency asset management and analysis firm, reported in 2019 that 74.1% of Bitcoin's electricity comes from renewables, while the University of Cambridge puts that number at 39%, according to a report it issued in 2020. A better indicator of Bitcoin's electricity source is not how it is powered, but where its power comes from. A March 2021 article by Quartz estimates that since April 2020, quote, around 65% of Bitcoin mining, or hash rate, was based in China due to its cheap electricity. This figure should give a better understanding of the primary source of fuel currently powering Bitcoin. In May 2021, at least half of China's significant share of Bitcoin mining was located in the coal-rich province of Xinjiang, according to the Cambridge Bitcoin Electricity Consumption Index cited by Quartz. In 2020, 63% of China's Bitcoin mining came from coal-fired plants, Fortune reported in July 2021, citing figures from Rystad Energy. Quote, the energy research firm estimates that if China were to eliminate Bitcoin mining, it would cut CO2 emissions by 57 million metric tons, the equivalent to what the entire country of Portugal emits in a year, the Fortune report noted. But despite these figures, a more renewable, energy-conscious future may lie ahead for cryptocurrency. In September of 2021, Chinese President Xi Jinping told the UN General Assembly that his country would, quote, strive to peak carbon dioxide emissions before 2030 and achieve carbon neutrality before 2060. That would then lead provinces such as Xinjiang to being forced to move more toward renewables. The call from Beijing has also prompted nearby territories such as Inner Mongolia, which made up 8.7% of China's Bitcoin mining in 2020, to ban all crypto mining in mid-2021. If the change doesn't come from within China after these crackdowns, Bitcoin mining may grow somewhere else as miners look to explore clean energy like surplus natural gas, shifting their focus from China to countries like Iceland, Norway, and Canada. Which is exactly what they've done, because in 2021, China banned Bitcoin mining. China went from controlling up to 2/3 of all Bitcoin mining in the world in April of 2021 to not contributing to the industry at all as of July 2021, according to data compiled by the University of Cambridge's Center for Alternative Finance. It's important that any valid criticism of Bitcoin considers the broader perspective around energy usage. As Michael Rocks, a research affiliate at the Cambridge Center for Alternative Finance, explained to CSNBC, quote, although we agree the amounts of energy needed by Bitcoin are ludicrous right now, that is still half as much as inactive home appliances in the US consume. A similar line of logic could be applied to a variety of everyday tasks, such as sending emails or using the internet in general, both of which use up a fair share of energy as well. Quote, what we have here is people trying to decide what is or is not a good use of energy. Meltem Demirors, Chief Strategy Officer of CoinShares, told CSNBC. For Demirors, Bitcoin's energy transparency places it in a better position than other, more opaque energy-consuming industries, such as the banking industry. To this effect, a May 2021 report produced by Galaxy Digital, a financial services and investment management firm based in New York, puts the energy consumption of Bitcoin at less than half that produced by the banking and gold industries. Putting this finding into perspective, the report's authors note that, quote, Bitcoin is a fundamentally novel technology that is not a precise substitute for any one legacy system. What this means is that unlike traditional currency or gold, Bitcoin is not solely a settlement layer, not solely a store of value, and not solely a medium of exchange. This makes Bitcoin's relative energy consumption productive in comparison to comparative sectors, given its robust potential uses. Galaxy Digital's report further addresses the source of energy used by miners to generate Bitcoin. Quote, critics often assume that the energy expended by miners is either stolen from more productive use cases or results in increased energy consumption, according to the report. Quote, but because of inefficiencies in the market, Bitcoin miners are incentivized to utilize non-rival energy that may otherwise be wasted or underutilized, as this electricity tends to be the cheapest. A recent case in point can be found in El Salvador, where President Nayib Bukele has announced the use of geothermal energy to power its Bitcoin mining. The promise of such an endeavor offers hope for a more sustainable cryptocurrency future. Whether this will make a difference to the climate crisis in light of government and industrial inaction remains to be seen. Even if cryptocurrency finds a way to coexist with a fossil-free future, critics point out that the majority of the wealth created by Bitcoin goes to a disproportionately small number of investors. The top 10,000 Bitcoin accounts hold 5 million Bitcoins, an equivalent to approximately $232 billion. Hopefully in the foreseeable future, some changes will be made and the energy consumption surrounding cryptos such as Bitcoin will go down. Until then, we can only stay optimistic. Thank you guys for watching today's video. If you enjoyed it, please be sure to like, comment, and subscribe. Thanks again for watching, and have a great day.